Hey everyone, hopefully you're having a good day. My name's Andy. The channel is Finding Value Finance. I've got Scott with me. He's got some new news. He's got a YouTube channel, so that's good. Congratulations, Scott. How do you find
Thank
your
you.
YouTube channel, Scott? What's the name of it?
So it's called Saw and Reap Capital. So if you just type it into YouTube search bar, you should be able to see it.
Okay, and that's
Awesome.
mainly commodities investing along with kind of religion and stuff, or what's this channel about?
Yes. Yeah, that's right. As you guys know, I'm a Christian, so decided to create a YouTube channel just to talk a little bit more about Christianity and Jesus Christ. And also our big focus right now is uranium. And obviously, as we rotate into other sectors within the commodity super cycle, I think we will start talking about the commodities as well. But for the time being, it's mainly uranium.
Okay, that's awesome. So if you guys want to subscribe, Sow and Reap Capital is where you got to check it out. And it looks like he's got a couple of videos up there already. So
Yeah.
good.
Awesome. Thank you, Andy.
All right, Scott. So when looking at this super cycle in commodities, the big question that I always get is, what's the exit plan? We get into all these, we load up, we get all of our commodities, whether it's uranium or oil or whatever it is. How do we get out of this? What are the signals? What are the signs for an exit?
Yeah, sure. I mean, exit strategies are really hard to kind of like set in stone right now because obviously our exit strategies will change as we see, changes in movements and price and also time as well. So obviously we'll need to be looking at both factors. But right now, what I'm seeing across a lot of the uranium plays is the Livermore's bullish trend. So for me, that's the base case. Because if you look at, say, for example, like Ura, which is your biggest uranium ETF fund, like what you see here is like a huge Livermore's bullish trend here.
I think you have to share your screen.
Oops, sorry. Yes. So this is Ura.
So you saying Jesse Livermore? Jesse Livermore was a famous trader back in the early 1900s, where he was called the boy plunger. He shorted a lot of stuff, made many millions of dollars. Was known one of the best well-known traders in history. So just to give a little bit of background there.
Yeah, no, that's great. And for anyone who hasn't read Jesse Livermore's what is it, the
stock operator,
reminiscence of the stock operator, I think it's a must read. Like that's probably my favorite investing book or trading book. So so Livermore's bullish trend is effectively something that looks like this, and this gets thrown around quite a bit on Twitter as well. But if you look at a lot of the charts now, I think we're at 7, so we're in a last touchdown, and so you can see that across many charts. And what I'm effectively expecting over the next 12 to 18 months is to see a huge leg up to 8 and then 9. And 9 is, in an ideal world, 9 is probably the best exit spot to get out of your uranium trade on. So if you look at your URA, which is the biggest ETF for uranium, you're seeing this bullish cylinder. Even if you look at something like UUUU, which is energy fuels, you're once again seeing this bullish cylinder as well. Sorry, I just drew that one in, but
maybe it's on like this versus whatever. Yeah,
that's right. And so this is just normal.
We're seeing this bullish cylinder across a whole bunch of different commodities. It's not just contained to uranium. We also see it in lithium, at least some of the ones that I look at. I see it in lithium. I see it in oil and gas. I see it all over the place.
No, 100%. Yeah. No, this is probably one of the most bullish patterns that you can find across the board. So like even things like PEN, which I don't have, but it is forming a nice bullish cylinder, as you can see.
Oh yeah.
So this is probably the pattern I'm going to go off, and I'll show you the most recent example that it's happened to, and it's Ethereum. And so Ethereum is actually going to be one of the exit strategies that I use, and I'll tell you why. Because this is the market cap of Ethereum. And I think I showed you this a couple of days ago, Andy, but effectively what you see across many uranium stocks is what's happening right now is it's formed a double bottom, it's peaked above, it's poked above this long-term resistance and support. So there's resistance here, support here, resistance again, it's broken above. Now it's testing support and it's ready to launch. And you can kind of see this pattern play out across many uranium sectors. But what's more amazing about this chart is that look at the market cap. So this is the market cap of Ethereum. Yep. And so it was, when it just broke out and retested, it was sitting at $37 billion. Isn't that like eerily similar to uranium market cap right now?
Uranium market cap is somewhere around that vicinity. Yep.
Yeah, exactly right. Yep. I think it's sitting at around 40 billion right now, or maybe just slightly above, given that it's gone up quite a bit. But yeah, effectively, this is what I expect to see. So once you break out of this Livermore's bullish trend, and once you've come up above this really long-term trend, long-term support and resistance, what I'm expecting to see is like a real launch. So one of the factors that I'm really looking at is 6 to 8 months leg up. So if you look at the CCJ chart, for example, and so I'll just show you this, right? So once you break out and once you have a full confirmation that it's a breakout, so it takes about typically about 5 to 8 months good leg up. So 1, 2, 3, 4, 5, 6, and then 7th bar is where it kind of fell a little bit. So 6 to 8 months, good leg up, 2 months pullback, and then you'll probably run for another 5 to 8 months. So 1, 2, 3, 4, 5 months in this case. So this is a pattern that I really like to see. And what it really tells you is, this is the leg up 8. So this is Livermore's cylinder 8, and then you get 9, and then you really fade off on the 10th. So this is what you're kind of seeing in the Ethereum charts and also the Bitcoin chart, is that you've got really strong leg up, and then you have another strong leg up, and then you fade a bit. So this is really good because you've seen that with CCJ chart back in the 2000s. So you've seen exactly the same thing.
Yeah, I've seen that chart in other companies as well on big long-term time frames.
Yeah, that's right. So I'll just take these off. But this is where we think we are. Based on, we've talked about this many times on where we think we're in the cycle. And we've said, this is probably where we think we are because of the rounding bottom, the similarities in the rounding bottom from here to here. If you put it into log, it pretty much looks the same. I'll just hide everything. Yeah, it's pretty much the same size and length of rounding bottom. And then your poking out here, your breakout here coincides with the rate time, which means, once again, rotation of money into the sector from general equities and bonds. So what you're seeing here is the same thing. So you've got like a Livermore bullish than the type of thing happening here. You break out of the long-term resistance, and what you see here is probably another 5 to 8 months of good price. So this is a breakout bar here. So this is monthly chart. So one bar equals 1 month. So what you're seeing is this is the breakup bar, 1, 2, 3, 4, 5, 6, 7. 7 strong months of leg up.
Yep.
And then you've got 2 months break, just like Ethereum charts. and then if you say this is the breakup bar, or this is the breakup bar, you go 1, 2, 3, 4, 5, 6, 7 months of strong leg up as well. And so this is probably one of the exit strategies I'm going to use, because my base case right now is that it's formed the Livermore's bullish cylinder, and that's probably the most relevant pattern for the time being from a technical perspective, for me anyway. And because you see that across so many uranium charts, it's not just like URA or whatever. If you look through most of the uranium charts now, like they're all forming, like even Bannerman, for example, I think is forming. If you go back to the weekly chart on Bannerman, for example, and by the way, guys, nothing that we say in this video is financial advice, so just wanted to make that clear. But look at that. That's a very neat looking Livermore's bullish cylinder.
To me, it looks absolutely excellent, and I like how like I call it, the way that dips down and then bottoms and comes back up. That means it's ready to go. Yeah, that's what I usually see.
Yeah. That's right. As I said, you just see it across so many charts, like EL8 as well. Look at this. It's absolutely forming a bullish.
It's ready to go. That thing is ready to go.
So what we're saying is, this is 1, 2, 3, 4, 5, 6, 7. And if you look at Livermore's bullish cylinder, it's 1, 2, 3, 4, 5, 6, 7 is the last touchdown, according to this. It doesn't always happen this way, but I mean, I see this happen a lot across many charts. And so what I'm expecting to see is the leg up to 8, which typically would last 5 to 8 months, and then about a 2-month pullback, and then another strong leg up for about 5 to 8 months again. And for me, that's when I exit. Obviously, things will change as I observe, the price movements and the amount of time that it takes for the moves to happen. But right now, that's kind of the time frame that I'm thinking.
So if you're to sum it up from here,
Yeah.
a top could happen 18 to 24 months, 18-ish months, something like that.
Yes, I think so. I think if I had to pick a number, it would be about 18 months away from today.
Okay. And
yeah,
how big of a move do you think we're going to get? Are we going to get like or is that something we don't really want to try to project? Like what?
Well, I don't know, because I think we can use Ethereum as the
market cap example.
Yeah, market cap, and probably telling around, if we experience similar velocity of money inflows into the market as we did in Ethereum, like, I don't know, we could expect to see something like this. And if you look at this is where it's quite similar as well. So I'll just do a measurement of the depth, right, of this move here.
Because I mean, to me, that looks like it's at a top right now. Just looking at the right hand.
Yeah, I mean, this
up on top.
For me, this probably looks like we're entering 9 and 10. Like that. Yes. That's what it looks like to me. Just purely using Livermore's bullish cylinder. But if I just go here to here, we're just measuring the depth of this, right? So depth of the rounding pattern. So it's about 1,600% from bottom to the top of this rounding bottom. But what you'll see is, you'll like this, Andy.
It's going to be the same.
You look at Euro, it's going to be very similar. From memory, it's very similar. So I'll just put it back in a log chart again, just to measure it up.
And you've got a rocket going to the moon.
So this is 1,700%. So it's within, it's very similar right now in terms of the rounding bottom and how big that move is.
The only thing I will say is that's from 2011. It could be even bigger if we went from 2007. Possible.
Yeah, we could be, for sure. But yeah, this is what I'm seeing. So I think we could probably expect to see a move similar, and there are precedents for this. Like we talked about, how crazy some of these stocks went, like Mega Uranium, for example. I do own Mega. I don't own this. I am considering getting some. But yeah, I mean, this is how quickly a move can happen. So you went from here, which is pretty much nothing, to that's 4,500% within how long? So this is 2005. Yeah, 2 years, less than 2 years. So you did 45x in less than 2 years. I'll show you Bannerman because this is even crazier. So Bannerman, let's go back to Bannerman. And let's do a measured move. Let's just do forecast.
Oh my goodness.
Is it from here to here? So within just over a year, right? Because that's the time frame that we're effectively looking at right now. We're saying most of the move will be done within the next 18 months. Yeah, within a year they did 5,700%. So there are precedents for these type of moves.
That's absolutely crazy.
Yeah. And this is what I'm talking about when I talk about the long-term resistance and support. You see that across many charts, and unless they are like really, really heavily diluted, you'll see this across many charts, which is just this really.
This chart looks so good to me. Like,
I know,
so good.
I mean,
so good.
I know.
Like if I were to,
and this is one of the.
Yeah, if someone were to say, go make a chart that looks better than this, I don't know if I could.
I don't think so.
I know.
And this is one of the reasons why I went so heavy on Bannerman is because of the chart. Like, I mean, I'm a chart guy, and if I look at charts like this, and I can't help but not look at it.
Well, here's a question. Why do you use the chart so much versus like the fundamentals? Like, why? I'm the same way though. The market made me look at charting and more heavily weight charting than the fundamentals. and I also think that the fundamentals are the technicals and so forth. But why do you overweight the chart more than, say, like what people would normally refer to as the fundamentals?
Yeah, because during euphoria, the fundamentals don't really matter. So there will be, like, if you're using certain charts, like there will be magnetic levels within the chart. So if you look at, it's crazy how well the charts work, because if you just look at this chart, for example, you've got resistance, support, 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 and then resistance again, and then it breaks out, and then it comes down to support. And for me, that's like a no-brainer buy, because like you've just come down, you've broken out, you're just coming down to retest. You're on, and on the chart just gives you like the next target levels. So for example, with Bannerman, like the next level that I see, like you hardly have any resistance. So yeah, until 87.5 cents, you don't really have any resistance. And if you break through, that's the next level. And then for me, this is also another magnetic level. So like when you look at charts like this, I don't know, like there's no rationale as to when people, during euphoria, like, there's no logical thinking. It will just all be chart based. And if it looks cheap because it's been diluted, like I think retail will really pile into the stock. So that's one of the reasons.
Yeah, no, I agree. I completely agree. And the markets made me look at the technicals and more heavily weight them than the fundamentals of a company. Because I won't go into a company unless the chart looks good, and then I go back and look at the fundamentals. I don't look at the fundamentals and then look at the chart and be like, well, this thing is no good. I always start with the charts, flip through it, and then I go back and look at the fundamentals.
Yeah, because if you're in a downtrend, for example, like, you just don't want to be touching it, because you don't know when the sellers are going to run out, right? Because, if the stocks are being pushed, it means there are existing sellers that are still left, no matter how good the fundamental of the company is. So you could be waiting a long time, and continue to ride the downtrend. So I think, that's why charts are so important. And this is probably, if I don't know what you think, Andy, but this is like a much surer bet now than when you were buying it here, right? Because of course, I mean, it would have been good if you bought it down here, but like there's no like, I mean, this was a pre-telling, I guess, breakout, right? With heavy volume, but you had a pretty good breakout here as well. Like you could have been just as easily being faked out here. So,
I bought it like at September, October of 2020.
Yeah.
One before that one is where I bought a lot.
Yeah.
And I've just been holding on because
I mean that's a good strategy to have. If it's absolutely basing out, then you could just buy it and hold and just wait. But
it squeezed up to a point. If you were to zoom in at the bottom there, that's how I picked the bottom. Well, as close as I could to the bottom. Might not have been the bottom of the bottom, but it was pretty close. And if you do like if you zoom in on like a weekly, it basically it formed a wedge right into the corner if you do a trend line at the top and at the bottom.
2020. Oh yeah. No, it did.
Yeah, if you take the trend line coming from the tops of it.
Wow, this is really good.
You can even go back further.
This is probably like
in that one, but
Yeah. Oh, from here to here.
Yep. Yeah, the whole thing was a big squeeze, and then 2020 was a fluke in March. Yep, that's what I did right there.
Yeah.
And then I just loaded in the tip of it.
Yeah, no,
it was a big squeeze, and the reason I did it was because it was so easy to see. I was like, this is easy. Like
that's really good, actually. This one, because what you see is like a huge squeezing up, like huge support around this level. This is a fake out, which means it's probably going to break out to the other side.
The spring, the slingshot.
Yeah, exactly. Yeah, so if you're looking at the monthly charts, I mean, these charts are just so beautiful, and almost feels like you're buying Ethereum at these prices.
Do you think that Bannerman could go past its all-time highs? Or do you think it's going to stop there at its all-time highs? I mean, you've got a monster pattern there on Ethereum. Do you think that 50 bagger that it had before, the 50-something bagger, is that first structure, and then the next one that's coming could be even way larger than 50 times?
It could be. So I'm just going to wait and see. I'm not going to try and predict, because effectively what I'm expecting to see over the next 12 to 18 months is like huge two leg ups. So 5 to 8 months each in length. So I'll just have to see where it gets to on its first leg up, and then just keep observing, because I think just as the price matters, I think what's just as important is just the time it takes. So if we're seeing like two huge leg ups, and let's say like next leg up we get up to here or something like that, and then yeah. So if we don't see, I'm not going to try and pick the top. Like, so for me, what I'm going to do is just wait for the two leg ups, look at all the other charts. Because obviously, if you look at other charts like Paladin, for example, I like to use Paladin just because it is a big stock and it's a producer. And this is how well the charts work on Paladin. Okay, do you want to see this? Because this is how amazing the chart on Paladin is. And this is how I kind of timed my entry into Paladin as well. And this is why I put so much focus on charts, is because, okay, so look at this, Andy. If you look at this chart, all this area here, so you've had resistance here, support here, resistance here, and then where did you stop the last run? Like right at this resistance. And where was the best buying opportunity? Right at this support. Yep. Where it bounced off in the last cycle back in 2005. So this is how beautiful the charts can work. And so I'll be using Paladin as well as like CCJ to guide my exit as well. So yeah, it's not just Bannerman chart that I'll be looking at on my Bannerman holdings. I'll be looking at all the other bigger miners to see where they are within the charts, within the patterns. And also, obviously, we'll be looking at a lot of ratios as well.
That chart looks absolutely excellent. The big up day like that.
Yeah.
Basically engulfing the ones all before it. That looks absolutely ridiculously good.
I know, it does. Oh, so Paladin is one of my largest holding as well. Yeah. So it looks good, but just getting back to, I guess, the Livermore's bullish cylinder, I just wanted to show you a couple of examples, because I've just been looking through all the trades that I entered into back in 2009 and 2011 into your silver miners, and they displayed something quite similar, not in the same, monthly timeframes or whatever. But if you look at this Great Panda, when I got this back in 2009, and this is probably one of the first ones that gave me the proper taste of the commodities boom. But so what you see here is, you see this long pattern. It's not exactly a Livermore's bullish cylinder, but what you see is effectively two strong leg ups, and it's done. So you see this pattern being played out quite a bit. So I think another one that I had was First Majestic Silver Mines back in 2009 to 11 as well. So you will see something similar here, which is you've got like a Livermore's bullish cylinder. You can kind of draw that in here. Mm-hmm. And what you see is two big leg ups, and it's done. And so this is like Livermore's cylinder, where like you're doing nothing. You're pretty much going back to this. It's kind of doing nothing, and then you come to this selling point. So you see that in this chart as well. Amazingly, I mean, I think these work in your mining sectors and also your cryptos, just because given the movements and things like that, you don't see it so much in your general equities. But let's look at like Rio Tinto, for example, which is one of the biggest miners as well. You see this being played out on your monthly chart. Let me just go back to this. So look at this. So you've got some kind of like widening wedge here happening. Something like this. And then you've got these two big leg ups, like one, boom, two, and yeah, and you're done. Like, that's the thing with these charts, is that the fundamentals, as you know, Andy, the fundamentals look the greatest near the peak for the miners typically, because they are cashing in, right? Their PE ratios are like starting to become really attractive because of how much they're cashing in. But I think you just need to trade with these charts, because once again, like, this is, I don't know if you want to call this a prop. So I can see a line here as well. So if you're looking at Rio Tinto, And let's say CCJ to me feels very similar to this, right? Because we just poked above. It's like, if you just go back to the CCJ example.
Yeah, it's a
me,
carbon copy.
Yeah, because you've just broken out. Like this is the bullish cylinder here. Sorry, this is messy. But what's happening now is you've just broken out of the cycle high. You're poking it, you're poking its head above. And if you look at Rio's chart, it's very similar. So you've just poked your head above, it's come down to retest, and then from the retest, it was what? Let's say this is the breakout. 1, 2, 3, 4, 5, 6, 7, 8, or 7. You can call it 7, and then rests for a while. I mean, obviously this is a bigger miner, so it did rest for a little bit longer. But yeah, once again, yeah, 1, 2, 3, 4, 5, 6, 7, 8, and it was done. So, so you see this pattern play out a lot across the board, and you can see this in the other biggest Australian iron ore play as well. So you can kind of see this is the Livermore cylinder here building up.
Yeah, they all have this lead in. When I was looking at these, I called it the double hump. It would always have these two humps, and I would negate the first one just because that's what I would notice.
Yeah.
And I saw it in like absolutely everything.
Yeah, that's right. So this is probably where we're at with CCJ. We're just breaking out of the cycle high, and then if we put in a pretty good fat green bar, what we'll do is 1, 2, 3, 4, 5, 6. And then, so that's 6 bars, right? Isn't that amazing? And then just 1, 2 months rest or 3 months rest. And then another hard run up, 1, 2, 3, 4. And then it's kind of done with this one. So that's kind of what I'm expecting out of the uranium plays. I mean, it could be shorter, like who knows, right? Because I think what's really important is that we just need to keep an eye on these, on how big these are. And also another thing that you can kind of use to see where your exits could be is to use log charts. So I'll show you with Ethereum. And if you use log charts for these parabolic moves, log charts work so well. So if you use log charts to time your exit in Ethereum, you would have done really well. I'll show you what I mean. So I'll just put this on daily chart. So this is the log chart. So this is the normal chart. It looks very parabolic, right? But if you put it on log chart, it looks pretty smooth. It looks very linear. And what you will see is if I just draw a trend line from say here to here, which is very linear. Let me just fit it so it touches these points. Maybe we can start from here. What you will see is like you could have picked the top almost perfect if you use the log chart on this.
Yeah, you could even draw a line underneath it and just do a line all underneath. And once it breaks that trend line, you just sell out.
Yeah, you could. What Andy's talking about is probably something that looks like this.
Yes. Yep. And then once it starts to break out of that and get underneath it, you're out.
Yeah. Look at the touch points, like touch, and then you've got everything like grinding, trying to break above, but you can't. So yeah, you could.
And it's okay if you miss a double at the end, or I mean, the move will be so big that picking the absolute top, I think, is almost impossible.
It's impossible. So, it's impossible. It's impossible. But yeah, I mean, with exits as well, what I tend to see a lot is that if you put this back on the weekly chart. So this is what I see a lot, Andy, as well. So you do typically have like 2 to 3 weeks blow off. So what you'll see on your Ethereum chart, for example, is you'll see a pretty clear pattern here. You've got like a bunch of resistance here, and when it breaks out, it's 2 weeks, right? So 2 to 3 weeks is when it comes out of these linear like trends and just absolutely blow. And then 2 to 3 weeks after that is when you kind of want to get out, because you see that in CCJ as well. You go back to CCJ chart and look back to the 2000s. I'm pretty sure you saw this as well. And you see this across many charts, actually, just 2 to 3 weeks, and then it's gone.
Yeah.
Yeah, so you can see it here, like in your interim pick as well. I don't know if you want to draw it here, but effectively, you've got a pretty like linear looking chart until this, but then it's like 1, 2, 3, 1 to 3 weeks, and then it kind of tops out and then does this. And then, same with this. Like if you want to draw it like that, for example, because that looks pretty parallel. Like if you want to draw this in, let's say you go.
You
like
could also sell out when it starts going sideways for a little while as well.
Yeah. So you can see this kind of parallel channel here on CCJ, and then you go 1, 2, 3, 4 weeks, and then that was pretty much when you wanted to sell. So yeah, there are just so many things that I would be looking at, but for me the biggest thing is I think time. So because there are so many opportunities, right? We've talked about this before, Andy, that there are so many opportunities within this bull cycle, and you know, using the ratios that you use and I use, we can kind of rotate into this, rotate into other sectors. So let's say we did like 10x out of uranium, and then we went into like sugar or iron ore or something like that, and did another 5x or 10x. That's like you can compound your returns like that. You don't have to like try and make all your money in uranium.
I'd probably go into like I'd hold on to my cash maybe, and then swap out over into physical metals. Would be like silver. Silver is going to do crazy stuff after a crash and they go to reflate. It'll just go.
Yeah.
So
but what I'm saying here is I'll show you like the rotation. Like it doesn't, with the super cycle, with the commodity cycles, they don't always go up in one hit. So one lags, one advances quicker than the other. So if I look at this, let's remove all this. Okay, so what we're trying to say here is Paladin energy. So what we're trying to say is this is Paladin energy, right? And typically the energy sectors lead first, as we've talked about previously. So you could have just easily gotten out here, right? Because this is probably when Chemico picked. So this is 2006, March 2006, probably when Chemico picked. And you were sitting at like $4.83. So from here to here, like you could have caught the top, but you would have only doubled your money. Like by sitting in this trade from 2006 to 2007 for, over 12 months, right? But imagine if you found another undervalued commodity within the sector, and imagine if you had rotated this money into
like mega uranium
metals. Yeah,
mega uranium would be the perfect one.
Yeah, could have been. Yeah, you could have gone into that. But I think once uranium's had that 2 mega runs, I think I want to be out of uranium altogether.
Yeah,
probably.
in general.
I want to find something that hasn't really broken out yet within the commodities complex. And as I've been saying, I think I'm watching like iron ore, sugar, copper, and things like that. That hasn't really fully broken out yet. And so if you had rotated your money, right, you would have done like, let's say you've done 10x with your Paladin. You could have done more, but let's say you did 10x here. And then you found an undervalued commodity within the commodities complex and rotated your money into Fortescue Metals, which is Australia's biggest iron ore play. So if you rotated money here, having done 10x, and got into Fortescue Metals at 74 cents, this went up to $12. So you could have done another 10x rather than 2x. Do you know what I mean, Andy? So I don't know. Like I want to just catch the fattest chunk of the uranium bull cycle, which I think is coming in the next 18 months. And I want to be rotating out to another commodity.
That's perfect. That's a really good plan. Yep. And if that interests you, definitely check out the Finding Value website, Platinum membership, because we're going to be looking at this stuff and when to do, to rotate out and what to rotate into. And that's going to highly depend on whatever's down at that time. And the charts are, forming a bullish cylinder or whatever.
Yes.
But
yeah,
yeah,
no, that's
that
exactly right.
makes complete sense.
Yeah, yeah. So that's what I want to do. So usually what I've seen in the past is that, your energy runs first, and then it's like your iron ores and agriculture, like sugar and things like that. And then you get the deflationary pressure. And then you've got like precious metals coming to light. And typically, like, I mean, if you look at the last cycle, I think rare earth was one of those that ran from 2009 to 2011. So you could, potentially put that on your watch list as well. I think copper stocks ran really hard with precious metal stocks from 2009 to 2011 as well. So, I mean, like, I know like the viewers love uranium, and obviously my Twitter is uranium right now, but I could potentially change that.
That's what,
later on in the cycle where I fall in love with another commodity that looks really cheap and ready to go.
That's why I named the channel Finding Value, because I could do it with anything, man.
Yeah, exactly. So yeah.
All right. So I think that sums up kind of the exit plan and rotation into whatever's next. So
yeah,
I think we can end it. I think we can end it there. Scott, thanks for taking the time and coming out here and sharing your exit strategy and what potentially we could rotate into right after.
Yeah.
So
no, that's all
and then
good. Thank you. Thanks for having
don't
me.
forget, guys, to subscribe to Sow and Reap Capital if you're interested in following Scott. And yeah, I think that's a great channel you've got going there. A couple of interviews.
Yes, that's it. And if you want to follow me on Twitter, this is me right here. U_AG_.
Yep.
And before we finish off, if you don't mind just me sharing.
Yeah, go for it.
Bible. Yes.
Yeah, go for it.
You. So obviously we're coming up to Easter. Easter is basically when Jesus resurrected from death 3 days after he died on the cross. So yeah, I just wanted to share Matthew 28:6, which says, he is risen, basically. So he died for us on the cross to wash our sins away. He resurrected 3 days later, and he has risen, and he is with us. So just wanted to share that. Thank you.
All right. Appreciate it, Scott. We'll have you back on here if you want to come back on the channel. And thank you for sharing everything you've shared. We'll catch you next time, guys. Thanks for viewing.
Thank you.
Finding Value.
Thanks. Bye.